What is the stock-to-flow model? How does it really work? There are important points, which one is scarcity metric, measuring a commodity's scarcity by comparing existing supply to production rate. What that means is in Bitcoin, you have a certain amount of coins mined already and a certain amount of coins that are not mined. The same in gold. You have a gold mine, you have mined gold already above Earth, and you have still gold in the Earth. This is the scarcity metric. There's a simple formula. It's called S2F, so stock to flow. And it's basically calculated that you take the existing supply and divide it by the flow. It's the annual production. In Bitcoin, this would be however many Bitcoins will be mined in a year, for example, and then you divide it by the flow. In gold and silver, a high S2F indicates great scarcity, and the same is true for Bitcoin. How S2F works in Bitcoin? You have the capped supply, which is 21 million. You have the current stock, approximately 19 million coins in circulation. That means these coins are mined already and they are flowing around in big wallets, small wallets, on exchanges. This is the supply, like you could see in gold. All the gold we see now in the world as whatever it is, jewelry or in some electronics or as spars or whatever it is. This is in Bitcoin the 19 million coins that are circulating. Decreasing flow, new Bitcoin mined yearly, half every 4 years. We have the Bitcoin halving. If you don't know what the Bitcoin halving is, every 4 years, there's just half of the Bitcoin mined. A very simple example would be, let's say this year there would be 100 Bitcoin mined, which is not the right number, just to make it easy for you. 100 Bitcoin mined this year. In 4 years, there will be just 50 Bitcoin mined this next 4 years. And then the next 4 years, there will also be just 25, and so it goes down. With the halving process, you're actually limiting the supply. And we see now the demand is really skyrocketing. And what happens logically? If you have a rising, really rocketing demand and a downgoing supply, it's very logical that the price needs to adopt. What happens then is that the buyers are actually more likely to spend more money on the asset because it's scarce.